In this video, we're going to talk about the financial markets in the fourth quarter of 2022. We hope you get some valuable insights. Welcome to Dorchester Advisors. Now, if you haven't met before, I'm Dushyant. I founded Dorchester Advisors, and we work with individuals and families to help them craft solid investment portfolios that will give them enough income to last them through their retirement. So what happened in Q4? Well, the financial markets gained in the fourth quarter but remained lower for 2022. All the 5 asset classes that we follow were higher, but not by enough to recover the losses for the rest of the year. And by the way, these asset classes are cash, bonds, stocks, real estate, commodities. Now, the main economic worries of 2022 were inflation and, to a declining extent, the supply chain disruption. What inflation did was resulted in higher prices of goods and services and higher wages on Main Street. And on Wall Street, inflation caused higher interest rates, which resulted in declining asset prices. And we made some progress. The supply chain disruption, which was largely due to Ukraine and COVID, is being rapidly sorted out. And I believe that we will also get a grip on inflation in 2023. So what helped and what hindered? Last year, these shocks of inflation and supply chain problems were shocks causing uncertainty and hence declining markets. By the end of 2022, these were all known issues, and I believe we have the knowledge and the institutions to work through them and sort them out. Moreover, we did not see a systematic or permanent impairment in our business ecosystem as a result of these shocks. But rarely do shocks play out in a linear manner. They usually oscillate up and down till they reach a new equilibrium. This implies being vigilant as investors. For example, in the equity markets in the US, we noted some interesting divergences. The Dow, representing some of the largest US companies, was down 8.8%. The S&P, representing a broader array of the largest 500 companies, was down 19%, about twice as much as the Dow. And the NASDAQ, representing smaller companies, emerging companies, tech companies, was down 33%, or about 4 times the Dow. And these kind of divergences also showed up in other indices, for example, the institutional index of Russell. And they even showed up in different investment strategies, for example, growth versus value. Finally, the divergence in performance was rather more pronounced in 2022 compared to other years. To us, this reinforces 2 very important investment principles that we believe in. 1, be evidence-based investors. Dig deep into the data, understand the subcurrents. We believe you should know the headlines, but also the bottom lines and everything in between. 2, diversification is very important for preserving wealth. Now, what did we do for our clients? In quarter 4, we reviewed client portfolios with an eye to capturing any tax investment opportunities, and we did. After all, investments impact so many tax categories. They impact your ordinary income, your capital gains, your net investment income, your the dividends are taxed at different rates, and there are even tax-free investments. So in conclusion, in 2023, we plan to keep clients diversified across the 5 asset classes, be prudent with any risks we take, and above all, remain cost conscious. We think this remains a sound investment strategy. Thank you for visiting with us. I encourage you to look through our website And if any of our ideas or our philosophy resonate with you, hey, give me a call. No obligations. We can talk very informally because we love discussing anything investing. Thank you and good luck.